Today, digital currencies rise as we get another sign that inflation has peaked. Plus, Coinbase just reported a $1 billion loss. We sit down with the company's CFO. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital assets are rallying today after new economic data showed inflation may be slowing down, which in turn raised hopes of smaller rate hikes from the Fed. By noon Eastern, Bitcoin jumped back above $24,000, Ether traded above $1,800, and Chainlink rose to $9. Okay, today we're jumping right into our main story. Coinbase released second quarter earnings yesterday, and it reported a $1 billion net loss thanks to macroeconomic pressures and falling crypto prices. Compare that to a year ago, when the company reported $1.6 billion in income during the height of the crypto craze. Fellow Crypto World host Kate Rooney sat down with Coinbase CFO Alicia Haas to talk about the results and how the company plans to return to profitability.
Alicia Haas, thank you so much for being here, CFO of Coinbase. Great to see you in person.
Thanks, Kate. It's so nice to meet you in person. We've had such an opportunity to talk online, but this is a wonderful opportunity to be here and on this beautiful day in San Francisco.
Exactly. Blue sky day here. And we've got a lot to talk about. Coinbase just reported second quarter results. Not quite what Wall Street was expecting, a big loss, more than $1 billion. What was behind that? Was this all the lag in crypto trading that we've seen? Walk us through that.
So I want to back up. So yes, we had $1.1 billion of net loss this quarter, but I think it's really important to understand that a lot of that was crypto asset impairment. So if you adjust for crypto asset impairment, it was a $647 million net loss for the quarter, which was in line with what we expected and what we had provided commentary on our May earnings call. So crypto asset impairment is we hold a bunch of crypto on our balance sheet. We have a lot of ventures investments on our balance sheet. And whenever the price drops below the carrying value, we impair to that lowest level. So what we also shared in our 10Q is price actually recovered past that. And so the fair value is higher than the cost basis, but we impair to the lowest price point that it ever reaches during the quarter.
So this is an accounting charge. A lot of other companies have gone through this too. Tesla, for example.
That's correct.
So is this something investors should expect going forward? If the price of Bitcoin doesn't recover, will impairment charges be a big part of Coinbase's earnings?
So anytime that it drops below that carrying value, yes, there's going to be further impairment. However, we've now impaired down to like a $17,000 Bitcoin price in Q2. So Bitcoin has come up beyond that. So we need to say it could drop below where it is today, but if it drops a step function lower, then there'll be further impairment for the existing assets we hold.
You talked a lot about the subscription and services revenue. That saw a pretty meaningful jump, but it's still really all about trading fees for Coinbase. When can investors expect meaningful diversification for Coinbase on the revenue side?
We are working on that. I would say that one of the things that we look about and we say in our Q this time, we said when we went public, is you need to zoom out. You really need to look at crypto across a price cycle. This is not a quarter-over-quarter linear story. And when you look at that in 2-year increments, we grew our subscription and services from 4% of revenue to 18% of revenue. We've grown them 44% year over year. Or when we showed in our letter, if you do it on a price-adjusted basis, we've actually seen pretty linear growth from just the adoption of these products and services. So we are seeing traction. We are continuing to roll out new products that fit into this bucket. But it will take time because there's been such interest in trading that we need to look at those as just on two different paths. And trading is going to go up and down with market, and subscription and services just going to like plod it out, growing in healthy growth rates, but at a slower pace because we have such reliance on trading revenue. So we're proud of the trajectory. We're continuing to invest, but let's see. It'll take a couple years, I would say.
Okay, so slower growth on that side. And then
44% I don't think is slow growth year over year. That's pretty decent growth
compared to what
slow
people
compared
might
to what people might be expecting, but we're really proud of the growth.
And so a year ago, this company was profitable, or at least reported a net profit. How are you thinking about that return to profitability? I know you talked about, again, a long-term play here, but what should investors expect? Is there a timeline they can look for?
Across a price cycle. And so we tried to be really transparent when we went public about how we were going to operate Coinbase. And we think about it as operating across a price cycle, that we're in this nascent industry, early days, and we did generate a lot of revenue last year. We generated $4 billion of EBITDA last year. And we said we were going to take that and invest that into new products, new services to get to that diversification of revenue point that you mentioned. And so we're not looking to be profitable every quarter. We're looking to be profitable across a cycle and to break even. When we get mature, when we see that we are in the place that we can move on to forecasting on a predictable basis, then we can talk about profits when we're in the more mature part of the phase, but it is early days. So our focus on growth.
And also cutting some spending as well.
Well, I think this is really important. So as we go through cycles, we go up, we take a lot of profits. We then invest those in the business, but we want to be prudent. And so we are really thoughtful and we manage to guardrail metrics. It's how we think about our business. So when we set forth this year, we said, we don't know if it's going to be a winter or not. We don't know exactly where the crypto markets will go. And we started the year with a really wide range of 5 to 15 million MTU. That was taking into consideration, it could be an up year, it could be a down year, and now we've seen down markets. But with that, we said, if we're in that down market, we will do our best to manage to a guardrail of $500 million EBITDA loss. That is obviously more difficult in the stress market conditions we find ourselves, and we took the cuts to our headcount and to other operating expenses to better be able to manage to that, and we're going to fight to get to there. We may not do it, but we are doing everything we can to have that the guardrail. Looking at that $500 million against our $6 billion of cash, we think that's the right investment level. We think that gives us a lot of runway to continue to grow the business, continue to invest, but do so prudently.
And how are you managing that? So it's a competitive landscape. You've got FTX, Binance, Robinhood now moving into the space. So you want to compete and spend to compete, but also cut back. As a CFO, how are you managing that?
I welcome these all to compete in this space. We actually think that there is room for many more competitors in crypto because we believe this is going to become a meaningful part of the economy and that more and more assets will move to token form. We're seeing more and more transactions move to stablecoins as an example. And so if you watch the growth of USDC as an example, now $55 billion plus, people using that for expenses, using that for investments, we see that there's just going to be a flippening. We're doing more in Bitcoin, we're doing more in Ethereum, and so we can't be the only bank out there banking crypto. We need the competition that you see with Citi and Bank of America and JP Morgan and Goldman Sachs and Morgan Stanley. Like, there's a room for all of us. And so one, we're growing the TAM, but two, the way we compete is we're trying to be an integrated platform. We are trying to offer the one-stop shop for our retail investors, for our institutional investors. They can come to Coinbase, they can buy their crypto, they can then stake their crypto, they can spend it on a card, they can then use that crypto and through our DApp wallet, get integrated with DeFi, buy an NFT, all in one platform. Today, when you try and buy an NFT before we integrated all of these services together, it was a clunky experience. You had to go from buying your crypto, moving your crypto to your self-hosted wallet, connecting it to a DApp, buying the DApp, talking about it over on Discord. We want to bring that all into one centralized experience, and we think that's how we'll compete for users on our platform.
And what about marketing? You guys had a Super Bowl ad last year, for
did.
example. What is the ad budget going to look like as you're pulling back here?
So we've moved the budget for the rest of this year to be fixed spend. Previously, we thought about it as variable as a % of revenue. But with the eyes on trying to be thoughtful about costs, we are moving to a fixed dollar budget for the year, which is going to be between $500 and $600 million of spend. We will reevaluate that spend in 2023. What we find in these markets, though, is performance marketing isn't as rewarding as it is during bull markets. And so we can lower that performance marketing spend while we still get our name out there, still find the right organic ways to bring customers to our platform. And it's a trade-off. Like everything else, we're trying to make the right dollar of investment, but still be prudent with our spend.
And what about user growth? There was a bit of a slowdown. You gave us some July numbers as well, 8 million monthly transacting users. Does crypto need to recover? Does prices need to recover for those users to get back into the game and start trading again, and for Coinbase to add more users? What is sort of the end game here to grow user base?
So I think it comes through a number of different vectors. So we've always seen a certain percentage of customers who are the trader-only customers ebb and flow with price cycles. So as crypto is going up, you see more traders come in. If crypto goes down, they move into a hodler mentality. But we think there's going to be different growth drivers for access to NFTs or access to staking, access to yield products. And we're starting to see that behavior as you're starting to see customers come to the platform for different use cases. And so our goal is to drive more daily utility. What we see on other platforms is daily utility is really the secret to broader customer engagement. And we need to move crypto in that direction. So what do I daily need to do with my crypto versus use it as a trade, where it may be a more monthly or more opportunistic activity.
And what about fees and margins? That's been one big investor
focus
question.
area.
Yeah, as there is more competition, as we talked about.
Yeah.
Is there any expectation that Coinbase on the retail side will have to lower fees?
We have not seen the need to lower fees on the retail side over the last few quarters. And we are constantly running pricing experiments and looking at price elasticity, and we don't see fee being the driving factor for retail products right now. That said, and we've said this a million times, absolutely over a long term, there's always fee compression in financial services. We've seen that in any financial services product that's been brought to market, is as it becomes commoditized, fees come down, everyone competes then on product or on experience, and price is not a common denominator. So right now we think we're competing on product diversity, and that allows us to have premium pricing, but that will evolve. And that will change, and that's why we're focusing so much on growing these non-trading fee revenues to really find other shares of wallet that we can compete for.
So by the time that is an issue,
that we hope that these things will, trading comes down, the growth of subscription and services as we move into more of the financing products or into more access to DeFi or utility fees on the platform.
Would Coinbase ever move into more traditional finance? We've seen FTX get into US stocks and equities. Robinhood has sort of gone the other way and gotten a little bit more into crypto. There's a bit of an overlap going on here. Would Coinbase ever get into stocks?
We're crypto first and crypto only, Kate. I would say it is not in our roadmap to go into what we consider traditional stocks or traditional bonds. We just think there's too much innovation in crypto for that to happen, and we are much more excited about the technology investments of providing a DApp wallet, for example, and providing access to our customers to participate in DeFi. That said, we also think that crypto will democratize capital markets, and we think there's a future where you're going to have security tokens, which are startups who then raise their capital on a token form of equity, because that can provide liquidity to more markets, it can be faster transaction speeds, you can have instant settlements. We think there's a future of crypto-based security tokens. So we look forward to working on that with the SEC. We think that that is something we are advocating for and wanting to open up that door, but that's very different than moving to what we consider today's security model. So we're moving in the crypto first and forward direction.
Potentially tokenized equities.
Tokenized equities. It's something we could get excited about.
Interesting. I mentioned FTX as well. We've seen Sam Bankman-Fried really step up in what we've seen as a liquidity crisis in the past 3 months or so, and really a lender of last resort, being a bit opportunistic when it comes to BlockFi, Voyager, making bids for these types of companies. So that's something that Coinbase considered, coming in and playing a similar role as Sam Bankman-Fried, for example, with that lending crisis. Why wasn't Coinbase a bigger player there?
Sure. So when we think about M&A, we think about it as what is our roadmap that we were already pursuing? And then we look at that roadmap and say, should we buy, should we partner, should we build organically? We have a financing product. We are already competing in the market for BlockFi in many regards, and so we didn't see necessary value there. We might have looked at that if that was something we wanted to focus on, but we are focused on organic growth in that instance. There could be other instances where you do see us come to the market and find opportunities to find distressed players and acquire those, or even healthy players in this market and acquire those. But M&A is much more of a how does it add our product roadmap versus us looking at ways to just be a player opportunistically going after trades.
And you mentioned in the release as well that Coinbase was able to avoid some of that lending crisis really that we've talked about. How was Coinbase able to sidestep that?
Our credit team has been built off of 20 plus years of experience in TradFi. So we've taken the lessons from 2008 financial crisis. What does asset liability mismatch look like? What does concentration risk look like? How do we structure a product that avoids the pitfalls of what has caused traditional financial firms to collapse in the past? And how do we build that in crypto? We felt that these incidents in crypto were actually not crypto specific. We thought these were credit specific with lessons learned from previous financial firms running into these issues. And so we've built our team. We're not the fastest to market necessarily. We don't offer the most leverage on our platform, but we're trying to build products that meet the test of time and serve customers over long-term interests.
What have been the takeaways from that event? Like you said, it's some of the same issues that people have dealt with for decades with traditional finance. Anything for young crypto companies that got tied up in that you would say is sort of the big takeaway?
You know, we've written some blogs about this, about how to think about risk management, and I would just encourage everybody who's building crypto to be students of the past and look at the lessons learned that we can take from TradFi and build better, jump the chasm. How do we build next generation and protect against those? Because there's a lot of learnings that we can take from these. But the key is to understand what you're building, identify the risks, measure the risks, run stress scenarios. It's blocking and tackling, Kate. There's no secret sauce here.
And being a little paranoid?
A little paranoid, a little skeptical, yeah.
What about M&A? We talked about that a minute ago, but are you seeing opportunities now as valuations come down?
We are constantly in the market looking for opportunities that I said add to our platform. So we're going to be opportunistic acquirers like we have been in the past. We are excited to look for opportunities. We did some really nice acquisitions back in 2019 where we were able to add Zappo and Tagomi, which really gave us the floor of our institutional product with the custody and prime brokerage solution. So we're looking for opportunities that can similarly really help us build scale as we look to build in some of these new areas this year.
And what has growth looked like on the institutional side? You had a big announcement with BlackRock. There's been a lot of excitement on that side of the business, although the fees are lower.
Yes.
So how do you manage growing that side of the business while knowing that it might be slightly less profitable?
Well, volumes are higher, fees are lower, and so just like anything else, we offer tiered pricing, and so the higher volume you get, the lower fees, which is aligned with many other products. So as we all know, there's a lot of dollars sitting in institutional asset managers. And so bringing more of that allocation into crypto, we think will be net positive, both to the crypto ecosystem as well as to our platform. For us, this integration with BlackRock, it brings crypto more mainstream, where BlackRock's the largest asset manager, bringing crypto into their Aladdin system alongside with all other assets and liabilities that people trade, just brings crypto with one less piece of friction, one less step that investors need to take to say, how do I access this? How do I manage this? How does my back office look at my trade data for risk management? So we think this will just continue to open the door, bring crypto to the table, and we see a lot of demand coming from institutions, and having players like BlackRock be able to say, we've got the risk management piece covered for you, I think is really additive to the space.
What are you seeing anecdotally from other more traditional finance players, asset managers on the institutional side?
Everybody's having the conversation about crypto, but it's a longer sales cycle on the institutional side. It took us years in the conversation with BlackRock to get to the announcement that we did last week. And across the board, I think that that's the case with institutions. They do due diligence, they're thoughtful, they want to think about first the asset class, then the platforms they work with. But I'm long-term very bullish. I think that there's going to be a big transition to crypto investing in the institutional portfolios.
Very interesting. I want to ask about regulation too. That's been a big topic.
Yes.
Cathie Wood, for example, sold a big chunk of Coinbase, more than 1.4 million shares, and said it was about regulatory uncertainty. How big of an overhang has that been on Coinbase shares?
So we have been advocating for regulatory clarity for years now. And we do think of what we think of the big blocks that we need to tackle in crypto. It is scalability of blockchains, so the infrastructure. It is then providing more user-friendly surfaces to get away from the complexity of crypto, and then it's regulatory clarity. Those are the three unblocks that we see to broad crypto growth and adoption. And so yes, I do think regulatory uncertainty is an overhang. It keeps institutional capital on the sidelines because they don't know what they're investing in, and it provides then a dark cloud over our stock and just broader perception of crypto. That said, we're very bullish about the opportunity for crypto regulation in the US. We've seen global regulatory clarity with MiCA passing in Europe, and with just recently we see bipartisan legislation coming out of Congress looking for clarity, and the White House executive order looks for more clarity. So we're encouraged by those signals. We hope to have productive conversations with the SEC to better define what is a security token for our benefit, but for all market participants to benefit, because we think clear rules, lots of people want to play by the rules. We just need to know what those rules are.
Brian Armstrong mentioned that on the call, the idea that the SEC did reach out to Coinbase in regards to potentially unregistered securities on the platform. If that moves forward and the SEC does determine that potentially hundreds of cryptocurrencies are actually unregistered securities, what does that mean for Coinbase's business?
There's lots of paths here, Kate. First of all, one, it would be great if we could all come to a definition of what is a security, and we look forward to the conversation to bring that clarity to the market. We hope that with that clarity, and we filed a petition with the SEC to seek this clarity, and also seek to get answers to the questions on, okay, if that happens, what is then the process for registration for market participants as well as asset issuers? How do we get to the right disclosures? How do we get to the right protocols? When you have something that instantly settles on chain, do we need a transfer agent? So there's lots of questions that we're hoping to unpack and bring public voice and public interest into this process. If we get there, it's a win. We're happy to register. We're happy to go in and do the right thing. But what we need to know is clarity of rules before we then understand next steps. So I can't answer next steps, but I'm hopeful we're going to have productive conversations to help us all get there.
Is the SEC the right agency to be regulating this? I know the CFTC has made some movement, and there's a bill now to give them more power. Would the CFTC be more involved be a good thing for Coinbase and for the industry at large?
We are really encouraged by Congress taking steps to make it clear that the CFTC will regulate utility crypto. As we talked about earlier around is Coinbase getting into stock trading, we believe there's a future where crypto will underpin all assets. We're going to have security tokens, we're going to have commodity tokens, we're going to have currency tokens in the form of stablecoins. We're also going to have art and NFTs and things we can't conceive of. And so in that world, we look forward to working with the SEC, the CFTC, Treasury, and all forms of financial regulators who are thinking about regulating these assets in new and novel ways. The rules as they exist today were written before the concept of blockchain technology, and so our goal is to bring this in the future. But yes, we're really encouraged by the signs of moving to the CFTC for things like Bitcoin, Ethereum, and all of the assets that we list on our platform today, which we take careful steps to assure are not securities. But we hope there's security tokens over time too. So look forward to working with the SEC as well.
One of the criticisms has been that there are rules out there that they have said, Jay Clayton in the past, who we've interviewed, has said essentially, the rules of the road are written, they're there, you've got the Howey test, but the crypto industry doesn't like the current rules. Is there a sense that that is the case and that the industry just wants to change the existing rules but is not operating right now within the guardrails?
So I think what's important to understand is the Howey test was a Supreme Court test, which is a 5-prong test. There's a lot of ambiguity on how those prongs apply to crypto and to blockchain assets because the nature of blockchain is so different. And our petition to the SEC brings forth these questions and seeks clarity on these questions. And so we would love it to be the case where Coinbase, all of our US competitors, the SEC, all regulators, all banks, all come to the same definition for all assets based on clear interpretations of these regs. Today, there's a lot of ambiguity, and the use cases of crypto are so unique that we don't believe that it's easy to just say the letter of the law applies in exactly the format that we would like it to.
Got it. And we talked about some of the cost cutting and spending. Is that a place where you may end up pulling back lobbying in DC and some of the spending that Coinbase has done in Washington?
So we are focused on policy advocacy, both in Washington but globally right now, and we think this is critical to unblocking growth in crypto. As I mentioned to you, we think that regulatory clarity, we think has the benefit of unlocking a lot of institutional participation in the space. So this is an area we will continue to invest.
You also mentioned that potentially less global expansion as a result of pulling back in the near term?
I think it's sequenced global expansion is how I would express it. So we still have ambition to be a global company. What we're going to do is move in sequential growth internationally as opposed to all places, all times. And so we have priority countries we're working towards right now. We're spending a lot of time expanding in Europe, as well as we have kind of boots on the ground in Australia and Brazil. But we will continue to expand internationally, just in a more sequenced pace.
And just to put a pin in the cost cutting too, it's not really a Marshall Plan of really cutting costs and pulling back. It seems to be you guys are lowering the expenses while still really pushing forward in some growth areas. Is that how
That's
you describe
absolutely the right way to think about it, that we want to do prudent spend. We are okay with burning in the short term because we think that the growth opportunities are so high, but we want to be rational and spend a proper amount vis-a-vis the capital resources that we have.
Got it. And then the stock price. So shares down about 75% from the 52-week high. What is it going to take, you think, to turn Coinbase's stock around?
There's a lot I can't control in the world, Kate, and that is probably one of them. But what we can control is that we're going to continue to focus on building great products, creating amazing customer experiences in crypto, and we believe if we do that and then turn those into revenue-generating products, that will turn the stock around. So I think we need to gain trust with investors. This is the first crypto cycle that public company investors have been through. We've been through 4, so we may have more confidence in them, and we need to win their trust and have disciplined execution through these markets so they can see that we are making the right long-term bets, which will benefit them over the long term. But we are looking for through the cycle investors, and we are not a quarter-to-quarter company, as we've said a long time, but we believe that we're making the right decisions for long-term shareholder growth.
And a bit of a macro question, revenue is very tied to crypto markets. Any thoughts on what it will take for a crypto market recovery? Is it the Fed? What type
Oh my goodness, I can't predict these things.
Macro event do we need?
Look, I think it's macro, but I think it's also micro. I think that we need to show crypto utility, and we need to move crypto utility into a daily use case versus more of a speculative investment. And so I think there's a lot of efforts to kind of think about products and customer experiences to make it more embedded in everyday lifestyle. That could be separate than broader macro events. I think that engaging creator communities and NFTs, I think moving crypto into a payments use case as an example, there's things that we can do absent macro, but obviously the macro could also help it as well. I just have less control over those broad.
Yes, and so NFTs, Coinbase has moved into that space. What have you seen as far as volume on that platform and user uptake in general?
Yeah, let me zoom out a little bit. So we think NFTs are such a critical growth vector for the entire crypto ecosystem because they solve a critical need for the creator community. And so if you think today how creators monetize through intermediaries, crypto gives them a way to directly monetize with their community groups. So we're trying to provide access to this community through many ways. So through the Coinbase Wallet product, you can engage with NFT platforms. We also have produced our own Coinbase marketplace. You should think about that being offered side by side of OpenSea's Nifty Gateway through our Coinbase Wallet and through our DApp marketplace, that we want to offer all access to NFTs. For our own product, what we were trying to do is build a product more for creators. And we wanted to create an opportunity for creators to then drop their content with their communities, find ways to engage and connect with their communities in new and novel ways where they are controlling the conversation. We've just launched this product within a few weeks, so this is very new. Our first step was to get a marketplace out there, which was a beta, early days. But really what we're trying to drive to is bringing a community experience. And the early signs from this is that's really resonating with the 3 drops that we've done. Those drops have sold out very quickly. We're getting great feedback of re-engagement with those creators, with those communities they're creating. And so we think it's a new way, but these are beta, they're first steps. So I think we have a lot of hope that this is a new product that we're going to test out the bugs and get there over time. So cautiously optimistic for long-term success.
What about Web3?
Yes.
Is that term overused?
Oh,
and what's Coinbase's take on it?
Web3 is it overused? I think it is not going to be overused. It's like if we said the internet was overused in 1998, we might have said it was overused then.
Overhyped maybe?
Overhyped at that point in time, but over the long term, I think the internet isn't used, but we all use the internet a lot. So I think it is a word that will become underpinning our society in 10, 15, how many years, because I think we'll move to a place where there's more direct peer-to-peer engagement through a lot of these platforms in a more decentralized way. But I can understand the feeling that Web3 could be overhyped today. But check back with me in 10 years.
We'll check back with you. Alicia Haas, thank you so much for being here.
Thank you, Kate.
Okay, that's all for today, but we'll be back again tomorrow. We'll see you then.